Hey, welcome to the show. I have a guest with me today, Jake Claver, who I've actually had on before. He's back again to talk about some cool new stuff. Jake, how are you today?
I'm doing well. How are you? Thank you for having me.
I'm doing great. It's nice to see you again. He and I have hung out at a bunch of different events we've been to over the travels in this year. So it's nice to see you back on the internet, though. Um, all right, Jake. So you and your sort of mastermind have got some really cool things going on, and one of the things that you have sort of created as an offer for the people in your program is this idea of custody, institutional custody, that has always had like a kind of an anxious reputation among retail holders. Are like, should we only want to custody our stuff? Is there risks to that? So I'd love to sort of hear your thoughts about custody in general, and then tell me a little bit more about what you're offering your clients kind of moving forward.
Yeah, absolutely. So there's always give and take with either one, right? Self custody, I think people want the responsibility and the ownership of these assets and to kind of get out of the system, right? But these are still public blockchains and you can still view all the transactions pretty openly. If you can identify who owns a wallet address, you could determine, all the other wallet addresses that they were interacting with. And that's the other piece. People want anonymity. Um, for their assets. And so I think I'll just speak to the pros and cons that are involved with what we're offering.
Okay.
So everybody's familiar with Ledger and some of the things that were discussed there, and the potential risks that are associated with that brand at this point. I know a lot of people have moved to EliPal and a few other air-gapped cold wallets that they use. Trezor, obviously, and then there's, if you're part of the XRP community, you might have Zum, and you have a Tangent card attached to that, so you have a physical piece of hardware. With what we're offering, we work with PolySign and standard custody, so our clients of the family office can hold their digital assets on their platform, and they don't have access to your wallet. They're not able to perform transactions on your behalf. It's still a cold wallet that you own and you have the keys to. They're just hosting the environment that allows that and have the physical hardware that holds the shards of the keys.
Hmm.
So with that, you're still going to have a physical device. You'll have a UB key that gets
Okay.
issued to you. That'll be specific to your biometric. You would have multiple signers on the account. So here's
Nice.
one of the cons to this. You're going to have multiple people sign the transaction for you if you
Okay.
want to move it from your account in standard custody to somewhere else. I don't know why you would, but you might want to move those assets somewhere else to sell them or exchange them or use them in some way. I'm hopeful that with XRP in particular, that's not the case, that you'll be able to utilize it in all the different ways that we're working with them on with no issue or having to move it off the platform. But let's say you did. Let's say you have your assets held in an LLC or a trust. That's one of the other caveats for our account with them is that it needs to be held by an entity. It cannot be an individual that holds the assets. And
Okay.
so you would have you're still the owner of the account. And the other piece that's a bit different than, let's say you moved your assets to Coinbase or Uphold, they're going to commingle your assets with all of their other customers in a wallet address. They might give you a tag, right, that shows your account number and the amount that they owe you, but your assets are going to be commingled with all the other ones. With our solution, they're completely separate. You have your own vault under our account. You can review that. It's a specific wallet address on the blockchain that's auditable. So it's not commingled. And then you also get the $50 million of insurance on your account or your vault. Um, and then that's done by Lloyd's of London, and it can be brought up. So we all hope that things will transpire that end up causing assets to appreciate significantly. And
Okay.
if that were to take place, you could increase the insurance on your vault. For
Okay.
them, it's actual crime insurance also. So Fireblocks and a bunch of these other providers or custodians, they offer insurance, but it's on the physical hardware for themselves, and then they kind of propagate that as insurance for users. Whereas PolySign Standard Custody, the insurance is specifically if you got hacked, right?
Okay.
Which is different than the majority of cases. So, caveat there, like I said, it's going to take multiple people if you did want to move the assets. Your trustee, if you're in a trust, and us as the account holder. And then if it's just a separate company, it might be you and us that has to sign the transaction to remove it from the platform.
Okay.
And there's the security protocol is actually a higher grade protocol than any other cold wallet that exists. And so I'll kind of explain how that works. On the back end, they will encrypt your keys and then they'll shard them and then they hold them on multiple pieces of hardware across the world. And then when you sign your transaction, it'll pull those shards back together, unencrypt them, allow the transaction to happen, re-encrypt, re-shard, and send it back again. So even a quantum computer would have a difficult time hacking this, and then all of the other pieces that are in place with biometric signatures, the passwords, the redundancies, the physical YubiKey that you have to sign the transaction. And let's say, you had something that got through all that. It can still only send it to the wallet addresses you have whitelisted on their platform. So it can only go back to a cold wallet that you might have in your possession or your account on an exchange that you have access to.
I have a couple questions.
Mm-hmm.
Why do you care if I have stuff set up in a trust versus just me having my own personal account? Why does that matter to you?
It doesn't matter to me. It matters to PolySign.
Okay. Why does it matter to them?
For liability purposes, and they're a trust bank. That's why they were established, right? So, I say that's why they're established. That's for my company. We've been setting up trusts and companies for digital assets to provide a lot of the tax purposes we discussed on our first time on this show, right?
Okay.
Mitigate taxes, provide opportunities for people to leverage their assets in ways that were benefited and could mitigate taxes. So if you set up a trust, you would designate a trustee that may be separate of yourself. If you have a living trust, it might be revocable or non-revocable. That's not generally the type of trust that we suggest somebody would set up for their digital assets in particular. Most of the time we're seeing people go toward a spendthrift trust or a digital asset protection trust that's filed in Wyoming. And with that, you would designate a separate trustee than yourself. And so in that situation, prior to this, you would have to split the keys. They would have half your keys and you would have half the keys. And in order to initiate a transaction, you'd have to bring those back together and put them in the wallet. And it's pretty convoluted and complicated. With this, it actually becomes much faster. So why do we go ahead?
I say PolySign also works with institutions. So obviously, if I'm a company and my company's assets, treasury assets, are stored in XRP, for example, do I need to have a trust too, or is a corporate entity all right as well?
Corporate's just fine. Yeah, so a holding company or a corporate entity under our account would suffice for their qualifications.
Okay. So it's really just separating this from the individual owning it to more of like a legal structure owning it, I guess.
Correct.
Okay. All right. So let's talk about this actual hardware thing. So right now, let's say I have my stuff on a cold wallet and I realize that maybe I have too much, and there's sort of this risk I lose it or my house burns down or whatever. So now there's sort of this third party protecting it. Why do I still need this physical cold wallet? Like, what role does that actually play? Do I keep this physical thing, or does it go in some safe somewhere?
So you would move your assets to the wallet address that they provided that has the security, right? So it's separate of what your current cold wallet is, but you could greenlist that cold wallet as a way to remove your assets from that platform to a spot where you know that you have access to them, right? So as a secondary layer of security. And you could even, if you wanted the most secure option, not even provide an address that you can send them to. So let's say somehow you did get hacked and all those things happened, which is almost impossible. Then there's nowhere for them to even send the assets to because no wallets have even been whitelisted or greenlisted.
Got it.
So yeah, I wouldn't throw your cold wallet away.
No, but you
It
said
could
with
be,
this custody thing, there's a physical device that you have. You showed me.
yeah. So this is a YubiKey.
Okay.
So I don't know if you're familiar with this. Maybe people in your audience would be, but it's a device that registers specific information and allows you to access certain accounts for you. So it's a physical piece of hardware that you have to plug into your computer or your phone when you're making a transaction that's
Okay.
required. So again, just another layer of protection. Just like you
Yeah.
need the hardware wallet when you're making a transaction for Ledger or Trezor or one of these other ones. This is what the physical piece of hardware that standard custody utilizes for that portion, for that
So it's
purpose.
a hack protection thing, because if you hacked into my phone, you still wouldn't have that physical thing. So, okay. I get
Exactly.
it. All right. So, what are the types of assets that people, if they chose to sort of join your mastermind, what assets could they do this with?
Yeah, so the mastermind's a bit separate. This is primarily for family office clients.
Yeah, yeah, okay.
There is a threshold of $100,000 is the minimum in digital assets that we're required to meet for our account. So, but to speak to your question, they have 31 assets that they custody at this time, and that's really determined by New York. It's not PolySign that went toward these. It's what they've been allowed to do. So that currently includes Bitcoin, Ethereum, XRP, Solana, Avalanche, Matic, Chainlink, and then a bunch of other DeFi protocols.
Okay.
And that's, again, they're catering to the clientele that they've dealt with in the past, right? So hedge funds or people that have created these funds, they're leveraging these assets in a way that produces income, and that lends itself to DeFi, right? And so that's why I think they've chosen Aave and Compound and some of the other protocols that they currently work with in custody. And I think that offering will expand as we see liquidity move into other networks.
Okay. One question I know that we did talk about last time, but if people missed that video, I get asked about this a lot. If I had, $100 million worth of XRP and I custodied it with PolySign / standard custody, is there a way that I can earn some kind of yield on that?
So not currently, but
Okay.
that is what we're working to do, right? So within the next quarter or so, I expect that we'll be able to leverage loans against the assets. I know we talked about that last time. Your
Okay.
ability to take out loans against the asset and not have any tax implications and keep your exposure for the long term.
Right.
And then, secondary to that, when we talked to David Schwartz at Consensus, which you were there for that event, and I'm looking forward to XTC in Austin. I don't know if you'll be down there for that. But when we spoke with him, he said that he expected the automated market makers to go live around October. That may be pushed based on my conversations with a person that runs a node on the network currently.
Okay.
But I'm hopeful for that. And when the automated market makers go live, you should be able to delegate your liquidity from your cold wallet at PolySign Standard Custody and earn a yield through the liquidity pools in LP tokens.
Now, if I were to delegate my XRP, that allows someone to use it in an exchange, right? Or no?
No, so similar to Solana, you can currently stake your Solana at PolySign and earn a yield there. So those returns are paid back to that wallet. Um,
That's
Delegated proof of
because
stake. Go ahead.
so Solana is a proof of stake network. So when you stake, you're participating in the consensus and sort of earning a reward for updating the ledger. That's not an XRP thing. There is no like staking for updating the database essentially. So how do you earn yield just for the transaction fees?
Right. So yes, for Solana, I mean you broke it down very well there, but it's a delegated proof of stake model rather than just regular proof of stake. So with Ethereum, you actually have to stake your Ethereum with that provider or whoever's running the node. With Solana, you can delegate your vote from your account where you hold the asset still to that provider and earn a yield that way. So
Okay.
that's how I believe XRP will work as well. You'll be able to hold your physical asset, still see it in your wallet, and delegate your liquidity from that XRP to the AMM that you're going to earn the LP tokens in.
So let me just make sure I understand. This is still about consensus and updating the ledger, or no?
No,
Okay.
ma'am. So, are you familiar with XLS 30D and the automated market makers?
Yes. But I'm still
Okay.
not clear how I could put my XRP into a liquidity pool and still retain ownership of those assets.
I'm confident that they've worked through that just based
Okay.
on conversations I've had. I believe that you will be able to maintain ownership of the asset and delegate the liquidity to the liquidity pool
Okay.
without having exposure of loss.
So
Um,
impermanent loss is a risk when you participate in a liquidity pool. I mean, you are essentially buying an ownership stake, a percentage of a liquidity pool. And if the composition of the assets in that pool changes because the trading is more balanced to one side or the other, you don't get back what you put in.
right. And so you can put up one side of that transaction. The AMMs on the XRPL allow you to do just one side of the liquidity
Ah,
pool and not
all right.
both. And
Okay.
then you would earn LP tokens for your portion
Mhm.
of that in a liquidity pool. You wouldn't be paid an XRP, right? But the way that they've structured that is also pretty ingenious. So there's no payments back to your wallet, so there's no taxable event until you take distribution. The way that this works is people will take distributions, they'll sell them on the secondary market to people that want to bid against the market maker and arbitrage the market. Those people will then bid a portion of what they believe they can, you know, reasonably gain in 24 hours in profits for the ability to do that. The LP tokens that go back into the liquidity pool will be burnt. And because there's a fixed supply, the value of the liquidity pool tokens goes up. So it captures that arbitrage or a portion of what that would be and pays that back to people that provide liquidity in the pool, which is not anything that's done with other automated market makers at this time.
Now that's new to me why I would buy a LP token, which represents an ownership stake in something, and then that would get burned. Does it get burned when I sell it? Is that the point? Like when I exchange it back, this token no longer represents value, so it gets destroyed. Is that the idea?
So when you take a distribution out of the liquidity pool and sell it, you'll get cash on the other side of that transaction or whatever you traded it for. The
Okay.
person that uses it to bid against the market maker, when they put it back in the pool, that's when it's burned.
Interesting.
So once it comes out and when it goes back in, that's when the liquidity pool tokens are burned.
And do you know if this XRPL AMM environment will offer insurance for people who so some of the there is insurance against impermanent loss in liquidity pools if you for something like Bitcoin. I've never heard of it for XRP. Do you think that would be a way to help people minimize their anxiety about
I do, and like I said, I think you won't actually have to put your XRP in the liquidity pool. I think maybe so. This is another function of PolySign's environment is they can escrow a portion of your XRP that's specifically for something. And with that, we're so you could escrow a portion of it that is held in a liquidity pool, or you're delegating to a liquidity pool, so that the collateral's there, and you could earn yield. And then maybe once you wanted to remove it, you could unlock that. I don't know all the functionality and how it will work, but I'm sure David Schwartz and his team have worked through all of this. Um, and the other piece that I wanted to mention is we can execute trades. So um, PolySign I thought when we first started this account that it was just going to be for people that wanted to hold long term, and it kind of made the determination that if you wanted to sell some in the short term, if we saw price appreciation, that you would just hold that off to the side and not put it in your account.
yeah.
They now have a feature where they work with an over the counter broker, and we can escrow that portion that you want to liquidate in your wallet, and then they will facilitate the trade, and then you settle up through Atomic Net when that's been executed. So, and the trading fees for this are significantly less. I've always been a proponent of Caleb and Brown. Their fees are high, but you have a broker. It's very great service that they provide. But with this, we're able to offer about 1/20th the cost to execute very lucrative trades with the over the counter broker.
I understand family offices are generally storing wealth, right? But would this work at all for people who are active traders?
In a one off situation, I wouldn't suggest it for people that wanted to trade on a daily basis, especially if you're using bots and algorithms yourself. I would probably, keep those in an environment where you had ready access to them. This isn't really a solution for that, but if you did have one-off trades where you wanted to take profits at certain price points, we are able to provide that at a very competitive cost.
Got it. And then obviously if someone has a family office, they're probably aware of what that's involved. But for someone who's not really familiar, because they're maybe a retail holder, like what is family office? What do you mean by that?
Yeah. So a family office is a corporation that's specific to a family and their assets and helps them manage their wealth and their estate, right? So it needs to be for profit and set up in the right way. But if it is, then we deal with estate planning, CPAs, accountants, wealth management, funds and foundations, family lifestyle management, concierge service, private security, all the properties that a family might own, a lot of real estate things on that side, as well as some of the toys that you might have, which might include yachts or jets or some of the other things that wealthy people tend to purchase in order to offset tax implications.
And because those things are fun.
Yeah, well, yeah.
So let's just go down the very optimistic route here, and we have retail holders of XRP watching this, and there is a massive price appreciation due to the virtuous cycle, which I've talked about a lot in this channel. When would someone need to consider opening their own family office? Like, is there a threshold?
Yes, ma'am. So we tend to start working with clients around the $20 million mark. Okay. We are a virtual family office. There's 3 different types of family offices that currently exist. So we fall within the VFO model, or virtual family office, cater to people that are somewhere between $20 and $50 million in net worth, and we offer a lot of a la carte services.
Okay.
We can do everything, but a lot of people come to us that already have some professionals that they already work with, but may not be necessarily proficient with digital assets. And so we kind of fill that gap. We either provide consulting with our professionals or plug people in as needed in those specific areas. You then have an MFO, which is a multifamily office, and that's a family office that has all of these professionals in-house. We outsource a lot of things to work with experts that have significant time under their belt in whatever industry or vertical that they work in, right? So, and they're also proficient with digital assets, which is a nascent market. There's very few people at this time that are versed in digital assets, whereas just traditional stuff, there's copious amounts of people. So an MFO would in-house all those people. We look to move to that long term. We are forming an RIA underneath the family office, and that'll be for the wealth management side, and there'll be insurance products and a lot of things that go along with that. But that's for people that are north of 50 million, maybe 100 million plus, if you wanted to save costs. And then beyond the $100 million threshold is that's when a single family office becomes feasible for most people. And that's where people work specifically for you. You no longer keep people on retainer, you pay salaries, right? Okay. And those are kind of the 3 different categories, and at which point you might look at each one.
Okay. I want to circle back to the custody issue, because when I have spoken publicly about PolySign, the people influenced by the Bitcoin marketing machine are very programmed with not your keys, not your crypto. So how do you respond to someone who has this anxiety about even considering custody when they sort of have really internalized this belief that they must only use a cold wallet to protect their asset?
This is a cold wallet and you own the keys. PolySign has no access to your wallet, right? So you have this physical piece of hardware just like you do with your ledger. The only caveat is you need multiple signatures on the account to move it, right? Which is also good in case you were to pass away, right? All of us are going to die at some point. It's just a reality of life, and you want to make sure that you have things set up so that your loved ones can benefit from the assets that you've aggregated. So that's another benefit here that maybe I didn't touch on before. You can set up just like you would for an account at Fidelity or your bank where you name a beneficiary. We work with people to set those things up, make sure that those things are in place. That's another benefit of the trust or the company, right? You're designating those people. And then along with that, we can add backup signatories. We can have people that are viewers of the account. And then, yeah, there's just a lot of benefit to this that I think outweighs the con. But to your point, you still have control of these keys. It's not PolySign or standard custody.
Got it. So it's different than when I go and put my money in my Wells Fargo bank account and have essentially relinquished ownership of my money without realizing that I have done that.
Correct. Yeah, they do not owe these assets back to you. And that's the other standout feature of standard custody. There's no risk of them taking your assets and doing anything with them that would be an exposure to loss, right? These assets sit in your account. They're auditable at any time on the ledger. You get a wallet address. And the other bit here is within your vault that has the $50 million worth of insurance, you can hold multiple assets. So you can have multiple wallets for your Bitcoin, your Ethereum, your XRP, whatever else, whatever other asset they custody can all be in the same vault with different wallet addresses, not commingled with the insurance. And again, you have specific access with your YubiKey.
Then just one thing that I'm just curious your thought on. There's a belief that we might see a very significant change in our modern financial system, and that some of the players who have really had a strong grip on things, almost in a monopolistic way, there might be an out with the old, in with the new. Lloyd's of London being one of them, as being really very strongly tied to the City of London sort of banking system. What happens if Lloyd's of London is no longer around?
That's a great question that I have not asked PolySign.
Okay.
So I will go back with that and get you an answer. But I'd suspect that they have other insurance providers. The reason that they're able to garner the level of insurance that they are is that there is no human interaction on the back end of these. Normally, if you worked with any other custodian in the city of New York that's regulated by the state of New York,
Okay.
they would have a physical hardware device that had your crypto on it. We'll do like Bitcoin IRA or iTrust Capital. Okay. They work with Digital Trust. Digital Trust holds your assets in a level 4 security area. If you execute a trade on there, they don't do that immediately. They have somebody that goes to that facility, gets let in through security at 4 p.m. every day or whatever time they've designated. They'll go in there, and that human will then proceed to issue those transactions that you've put in on their platform. With this, there's no human interaction. There's still level 4 security. The hardware devices that they store the sharded keys on are in all level 4 facilities, and there are armed guards and all those things that protect those. But no human has to go in there and issue the transaction because of the algorithm that Arthur Brito and David Schwartz developed for PolySign and the blockchain that they use. So anyway, yeah, I think that this will change a lot of things for financial institutions and their ability to hold crypto. I don't know that the security will be as high level. Well, it'll have to be, even for, Wells Fargo or JP Morgan Chase or whatever other bank decides to utilize this wallet and the cold wallet that technology that PolySign and Standard Custody has. I think that they will license this to other people, and they won't necessarily have a monopoly like they used to, but I think they'll still be players in the game.
Okay. I think it's great because it's one thing to have a cold wallet with maybe, $100,000 or less on it. But if you had this cold wallet and there's like millions and millions of dollars worth of value on it, I would have serious anxiety about losing it or wrecking it, like dropping it in the water. And if you're someone who
The
maybe
boating
travels a
accident.
lot, do you leave this thing behind? You take it with you? So the idea that it could be in some place where it's truly safe, I think is pretty amazing and necessary if we really are going to see widespread adoption of these digital assets.
Yeah, I think, and family offices have have kind of reduced their exposure to crypto in the recent, well, since the bear market, right? I think a lot of people have reduced their exposure to crypto during the bear market. But with this, I think institutional custody will come along at a high level, and then it'll make its way down, right? You'll eventually be able to hold your assets with your bank. Again, I don't know that it'll be as secure as this, but it'll lend itself to that ability long term as things get worked out. Things tend to start with very affluent, wealthy individuals and then disseminate themselves down to retail. We see this with like Uber, right? You had people that had their own cab driver, as wealthy people. And now anybody can call an Uber and get your own cab driver.
Right.
I think that we'll have something similar with this custody solution over the next 3 to 5 years.
Awesome. Well, this is cool. It's nice to see sort of the industry kind of mature and develop some really responsible initiatives like this. As you know, crypto for years kind of had this reputation as being this sort of speculative, like get rich quick, almost like casino type vibe to it. So this is a much more, elegant, mature set of solutions for people who are serious about wealth and not just looking to, play the ponies kind of thing.
Yeah. Well, and we'll have tokenized securities as well, right? So that's really how PolySign, Standard Custody, MG Stover, Atomic Net, they've all positioned themselves to be able to handle the tokenization of other real world items and financial products that currently exist, not just digital assets that we think about or crypto. I think that they will be the standout in that space long term for custody, fund administration, and the facilitation of transactions of those digital securities.
Awesome. So if someone's watching this and they have a family office or are connected with a family office, what's the best way to get in touch with you to learn about sort of next steps?
Absolutely. So you can go to digitalfamilyoffice.io, reach out for a consultation, or we have our custody solution there where you can be onboarded. It's not necessarily people that, have to have a family office set up today. If you feel like your assets are going to appreciate significantly in the future and you might fall within the thresholds that I mentioned before, when you might look at a family office, we are onboarding people and providing this solution to people that we feel will have that need later on. We want to make sure that we're cultivating relationships and providing value. So don't have to have a family office yet in order to take advantage of this, but I think a lot of people will have that need in the future.
Awesome. And then if someone is maybe not really there yet at all, but would like to sort of learn more about your mastermind that doesn't require you to be a family office, what's the best way to find out about that?
Yeah, absolutely. So that's mastermind.beyondbroke.com. And we do a lot of other things there that aren't necessarily correlated with the family office. Provide financial education, business resources, and then knowledge around private investment. We also run some private investments through that group in a way that allows a lot of people to participate that may not otherwise be able to.
Like, for example, if they maybe aren't an accredited investor, they have an option to buy some private equity. Is that the case still?
Correct, yeah. So in the eyes of the SEC, you have to be sophisticated in order to participate on those deals. And that's why we provide the education that's required for those people to meet that criteria to qualify. Yes, ma'am.
That's awesome. That gives people who want to show the initiative and have time to invest, but not necessarily financial resources, it gives them a way to get into those markets, which I think is great.
Absolutely.
So awesome. All right, Jake, thank you. Always a pleasure to hear what you've been up to and learn about these cool things that you're offering the market. So I'll have you back next time you got something new to share. How does that sound?
That sounds great. Thank you for having me, and thank you for everything that you do for the community. I know that a lot of people watch your channel and get a lot of value. I have people reach out all the time that mention my time on your show, and they watch you frequently. So I just want to say thank you for everything that you put out.
You're very welcome.